Hello? Hi. Okay. So, good afternoon, distinguished guests and ladies and gentlemen. I've just had a request to ask if people could just turn their mobile phones off because of some earlier sessions where we had some rather conspicuous beeps. So, if you wouldn't mind. And I'll just, hopefully we want to keep this session more informal, and there'll be time for questions at the end. I hope to have a wide-ranging discussion. We've got a good representation here of both banks and a consultant who works with banks and a leading microcredit expert. And we'll focus not just on Myanmar, but the region and broader issues of financial inclusion. So just to introduce our panellists, at the end here is Tim Amstutz, who's chairman of the board of directors of Credit Microfinance Institution, leading microfinance group in Cambodia, established in 1993, which also actually is involved in primary health care in Cambodia. And Tim also serves as Asia Regional Director for World Relief US, overseeing work in Cambodia, Indonesia, India and China. So hopefully, Tim, you can bring some outside perspective to our discussion today. And next to him is Kim Chosu-ji, who's Managing Director of the International Banking Division and Head of Transformation, which is a very big role indeed, at KBZ Bank, the largest Myanmar bank, and she has had extensive experience abroad, particularly in New Zealand and Britain. So she also brings a wide perspective. Next to her is Clement Kayo, who's Managing Director for Myanmar at Vriens and Partners, which is the premier, I'd say, government relations consultancy in Myanmar, overseeing political and regulatory analysis and advising on stakeholder engagement, has travelled extensively in Myanmar and speaks Burmese too, I might add, and Japanese. So hopefully you won't have to use that today. And last but not least is Hao Bosha, who is Special Advisor to the Chief Executive Officer at Yoma Bank, mid-sized to small but extremely innovative Myanmar bank, which has grown and expanded a lot in the last couple of years. And Hal also has extensive experience abroad, spending 10 years with the World Bank Group at both the International Finance Corporation and MIGA, the Multilateral Investment Guarantee Agency. So he can also bring some perspectives from multilateral IFIs to this discussion. So actually, I'd just like to kick off the whole thing with a very general, and it's actually a fairly well-worn question, but I think it's a very relevant one considering where we're sitting in Myanmar and at the heart of ASEAN, where we still are seeing extraordinary discrepancies in income levels and access to finance and banking services, which is, how do banking and financial institutions reconcile their need for the profit motive and to be profitable institutions, particularly ones with shareholders, with the need to be good corporate citizens, help close these huge gaps in incomes and living standards? How do they manage to reconcile these two things? And Hal, I know you've got some strong thoughts on that. We can talk specifically about Myanmar, and with some of the other panellists, maybe you can look more broadly. But over to you.
Well, I think generally speaking, probably an important point to make, whether in Myanmar or in other countries, is that financial inclusion in itself is not necessarily unprofitable. And I think if you look at many developed markets, if we're talking about the bottom of the pyramid, retail banking effectively is financial inclusion in developed markets. So if you look at the most recent sort of innovations in this space, they do refer often to payments. And you can look at some of the more commercially minded companies in this around, including Apple, that are getting into payments, Apple Pay and others. And I think those are all aspects that demonstrate that really financial inclusion, bottom of the pyramid, the mass market is an area which is increasingly becoming accessible through technology and doesn't necessarily need to be offset with a lack of profitability. So I see no conflict between the commercial objectives that, for example, my bank would have, our bank would have, and offering better financial access to both the people of Myanmar but across the region.
So you can be a good citizen and make money at the same time.
I think with investments in the right areas, clearly technology underpins all of this. So communications technology, the commensurate investment within a financial institution or any other institution to be able to leverage that technology is critical.
Okay, well, I think we'll come back to you because I know that you were saying it's also beyond the control often of a bank that wants to be a good corporate citizen. You've got a lot of constraints in regulation as well, but you can maybe come back to that and tell us a bit about that. Raman, what's your view on?
Yes, I surely agree with the whole. I see no conflict between the two objectives. And I think this is true for specific financial institutions, but also for governments that have a strong interest in mobilizing capital from their citizens in order for it to be reinvested into the economy. And if we look more specifically at the case of Myanmar, where a very low percentage of the population has access or has a bank account, well, this is a really lost opportunity. And this is also why so many foreign but also local financial institutions are keen to access these remote areas or these populations which are not included currently in the financial sector. And in order to do that, some decide to open banks in more further regions over time. Others look also at the use of technology. And of course, there are banks, but there are also microfinance institutions that are looking at serving the bottom of the pyramid. So I think this is quite a complex environment with a large number of stakeholders, not only the consumers, the financial institutions, but also society and government.
Right. And Kim?
I think the way I feel about it is that when it comes to financial inclusion, it should not be an exclusive club for people who have the means to be able to have access to banking, right? So everybody should have access to banking, and banking is probably one thing that people have access to if they have. But then with that, it also comes in terms of other responsibilities, right? With financial inclusion, you also have to have linkages to healthcare and infrastructure. So there's a whole suite of different things that needs to be looked at, right? And being involved in the banking sector, we do focus on financial inclusion, but because everything is interrelated, private banks or public banks is something that we cannot be doing it alone. We also need the help of the government to reform in certain sectors, right? And if we talk about microfinancing, there is a need for it. It is very costly and is very labor intensive. So we have to look at things like mobile banking, right? And in that case, we do need the infrastructure help to make sure that people have access to a phone, and then they have access to infrastructure, and they'll be able to look at their accounts and things like that, right? So there's a lot of things that, there's a lot of things that you need. So although you look at one pinpoint, there's a lot of attached linkages to other things that you need to look at.
Right, thanks. We'll come back to that too, but Timothy, for now, your perspective. Can microfinance really help the poor? Do we need it? Where does it fit in the banking landscape?
Sure. Well, and certainly on this issue of inclusion, microfinance, a core principle for microfinance is to reach the bottom of the pyramid. And as to profitability, we've seen that we've proven in Cambodia, certainly, that microfinance institutions can be extremely profitable and at the same time reaching the poor. We do have to acknowledge, though, that there is a trend there's always a temptation and a trend to go upmarket within the microfinance industry in order to generate more profits. And then there's that temptation to sort of begin to forget about the bottom of the pyramid because the profits are so attractive. So there has to be a great deal of intentionality whether you're a bank or whether you're a microfinance institution, you have to be very intentional about creating products that are really going to serve the poor in the best possible way. But we've shown that they can be profitable. The other interesting dynamic that we are seeing in Cambodia is that banks, commercial banks, are now moving more into the microfinance sector. So you see this convergence of, the microfinance sector going up market and the banking sector going down market. And so the lines are being blurred now between
Does that
the two.
leave the top and the bottom sort of linking in?
That's right. Well, for us, for credit, microfinance, we've actually, our strategy is, there's that soft middle sector which everybody is trying to target, and with a growing middle class in each of the ASEAN nations, that's an attractive market segment to target. But what we found is that there's not enough investment then with the upper end of the market, nor with the bottom end of the market. So our strategy has been to go up market in order to finance our operations down market. So it becomes like our down market operations become like a loss leader in a sense.
I see.
Because we're able to maintain profitability by serving the upper market clients.
But what's in it for a big commercial bank to move into microfinance in any big way?
I would say that they're probably reaching more of that middle sector and not the lowest level, the most vulnerable of the poor. They're looking still at people who have strong entrepreneurial inclinations and abilities. They're going farther down than they've reached before, but probably not to as low in the market as, say, the microfinance sector is going.
Okay, so we'll hear from our commercial banking representatives on what they think about moving into microfinance. But actually, first, I just thought maybe you could give us a very quick definition of microfinance. I've heard many, and in Myanmar, which has just embraced it in a big way, some of the rules are a bit different than in other areas. How do you find it generally? How would you define it as seen in the ASEAN region?
Right. Well, it's not rocket science. It's basically lending to the poor and providing small loans at a shorter term in order to provide business opportunities and create pathways for them to create more stable income for themselves and their families. Now, I would say for me, there's a bit of a worrying trend in the microfinance sector where a lot of loans that are now being created, loan products, are oftentimes being created more for consumption loans rather than to create business opportunities. And that's quite a concern for me, especially among the poor.
But isn't that up to the lender to...
Oh, sure. It's up to the lender, but I think in terms of the overall economic health of the families of the poor, as well as the overall economic health in the nation, we've seen problems in the developed countries where there's too much debt. We've seen financial collapses happen because of that, and it would be a shame to see the lessons not learned from the developed world, in the developing countries.
And how...
Well, I would pick up on that, and it dovetails nicely with your point about why banks would get into this space. Banks clearly want to get into consumer credit, which is, I think, the point that Tim's making. Yeah. Where we don't want to get into is microfinance, because it requires a lot of tailored product and hand-holding that banks aren't necessarily good at. Right? But I think it's important not to confuse one for the other. And I would argue that there's some regimes in which microfinance is effectively being used as consumer credit, which is really not the point. And I think maybe in Myanmar that might be the case here because, and to come back to the regulatory, because all lending in Myanmar is secured, you can't do unsecured lending. So actually microfinance has become a window for, not exclusively, and you'd have to look at for unsecured lending, i.e. consumer credit, which is a bit, should be done intentionally if that's the purpose, but if it's been done unintentionally, then it does require some thought.
Yeah, you're saying it's under a completely different regime and administered under a completely different, it's not under the central bank, it's...
Microfinance has a characterization as you said, for the poor, and it should be done in a it's clearly not an unprofitable way, but in a sustainable way with a certain intention. Consumer credit has a totally different character that needs to be managed with credit scoring and in a completely different balance sheet way. And if you blur one with the other, then you'll have trouble.
Right, but by definition, aren't there, as far as I understand it, in Myanmar, for example, the maximum microfinance loan is what? It's tiny, isn't it? Isn't it like $300 or something?
It's a small amount.
You can't go and buy your first car with that.
And I think what is happening that I'm seeing quite a lot is that because the amount is so small, right, and as a bank, we are regulated and we're not able to give loans to small businesses without collateral, right? And that effect has actually driven people to go into informal lending sectors.
You mean even in the SME sector?
Yes,
Not just not just individuals living in little villages wanting to set up a cottage industry.
Exactly.
Business,
So the way here is, microfinance is a wonderful thing. And a lot of our neighbors have done it in Vietnam, Cambodia, Laos, and to a certain extent, it has been successful. But we actually need to tweak the model a little bit to make it more for us, for Myanmar, people, right? So when a small SME business needs financing, if they don't have a collateral, the first thing that they will go and do is ask family members or friends, right? If that doesn't really happen, then they are forced to go into unregulated, waters, which is not what we really want to see.
And as you understand it, or perhaps Roman, you have an idea. Do you know, is it under consideration to reform and change this?
The way the microfinance industry is regulated?
Yeah.
Not as far as I know. I guess the Ministry of Finance, which oversees this sector, is probably listening to the advice provided to it by various international financial institutions, but I'm not up to date as to where the debate stands currently. I think the limit on lending is 500,000 baht, about $500, which is quite low. But to go back to the situation of lending in Myanmar, actually my understanding is that most consumers and companies, most companies here being SMEs, rely on the informal sector for loans, where they have to pay very high interest rates. And this is, as far as I understand, probably the largest financial sector in Myanmar, the informal one rather than the formal one. So also the question of how to regulate this informal sector is being raised, because actually a lot of what is happening is beyond the reach of the central bank or of the Ministry of Finance.
Right. Thanks for that. So actually, this issue of secured lending and the requirement to only be able to lend with collateral is just one of the various problems I think you two were mentioning that banks here are labouring under, and we've seen right through the region there's all kinds of restrictions, but these ones in Myanmar at the moment do seem particularly draconian if inclusion is one of the priorities. But it's also a time where the local banks are seeing the entry of foreign banks. We've just had 9 foreign banks being granted licenses, very limited licenses. They can't do retail operations, but at the same time, it's become an issue with local banks. And Hal, you've mentioned some other restrictions, such as your favourite one, the opening hours, the strict regulation of hours that banks can open. So maybe you could talk about some of these other constraints that you see as kind of curbs on the banks here. And let's just say, even when if foreign banks got retail licenses, they would actually be under these same restrictions. So, but still, you are labouring under a few.
Myanmar Bank staff work very hard, but I would like them to work those extra hours so we could offer more service to our customers. I think it's not extreme to liberalize, right? To allow banks to open till whatever time they see as sustainable or profitable. And I think that
it's what time?
Excuse me?
At the moment,
3 o'clock. 9 to 3. And I think if you can't get to the bank because you're at work, that is probably the first step to financial inclusion. You can imagine that's quite a simple thing to change. That being said, I mean, I think there is a valid regulatory concern about the ability of banks to lend profitably to a space that they haven't historically done. Meaning that they're highly complex models that Western banks use to lend profitably to consumers in an unsecured way that a lot of the local banks don't have access to yet. So I can certainly see that this would be a staged approach whereby the local banks are gradually allowed to do unsecured lending and gradually allowed to price their product along the way. To your point around the entry of the foreign banks, and all due respect to our friends coming from overseas, my sense is that generally speaking, that their target market won't be the one that we're talking about today. I think it's safe to say that because of the restrictions of their license and because of the way that they will bank, I think as far as broadening the base of the financial sector here, that wouldn't necessarily be something that they would focus on.
Right, thanks. Well, we'll move to Kim in a minute, but maybe you could just also say Yoma Bank is just embarking on an ambitious expansion. So when you say the foreign banks would target a different market, what kind of market do you see in this expanded view of Yoma's vision in Myanmar?
I think this is really speaking to Myanmar in particular. And if you look at the history of Myanmar, financial inclusion, I think people effectively need to trust their banking partner, right? So there needs to be a trust that the bank is being run responsibly and in the interests of not the owners, but depositors. And I think we as a bank, we're looking to position ourselves in the market whereby we're managed conservatively, and that there need to be incentives for people to join the formal financial sector. And today, to be frank, it's hard to understand, their fees, their hours are limited, they can't access finance. So to be consumer friendly, to manage a bank responsibly, and then to provide incentives for people to join the formal financial system, I think is something that we as a bank, in the years to come, is an area that we're going to focus on. And it's really about being a responsible bank and focus on the needs of our customers.
And are you saying that you don't really see this this initial stage of entry of foreign banks as a kind of competitive threat or?
Markets are tiered. And I think the space that many of the local banks are targeting is, frankly, relevant to this conversation: mass market, consumer banking, retail banking. I believe that the foreign banks, generally speaking, will service their existing MNCs, their existing regional clients, and maybe cherry pick some of the high-end local corporates. Mm-hmm. That is an area we're certainly interested in, but I think in terms of the growth of the country, if you look at percentage of GDP in the formal financial sector, depending on who you believe, it's roughly 15%. So that means 85% of GDP is not in the formal financial sector. Well, where is it? Right? It's in gold, it's in land, it's in precious stones. It's not, and that's a question of trust.
Right.
So I think that's an obligation for the local banking community to really stand up, take that responsibility, and incentivize people to join the formal financial system.
Right, and Kim also as another representative of the banking community. What are your thoughts on that, and in particular this question of trust? I guess this is another thing that sets Myanmar apart from many of the other Southeast Asian countries, which is the complete collapse and the devaluations we've seen in the past, which shattered people's trust in banks altogether. So we were just talking about, 6% of this country has bank accounts, which is quite different if you add it up, even I think against Cambodia or somewhere. So how do you see those challenges that Hal just outlined?
I think, like you mentioned, Gwen, we did have a bitter memory of how it happened in the past, and a lot of people I find it difficult to move beyond, right? But I think it has coming in a way that the banking sector has actually grown quite a lot, probably in the last 3 to 4 years, in the sense that our bank included, and also our other local banks, everywhere they open, whether it's in towns or cities, there is quite a lot of foot traffic coming into the banks. And I see it as a trust in the banking sector, right? That knowing then that the customers have faith in the sector, that if I put money in KBZ or Yoma or other banks, right, when I go to bed tonight and then tomorrow, I'll wake up and I can still withdraw money, right? It'll still be there. Because that's
but your mother probably didn't sleep well about that.
Yeah. So once that is taken care of, I think banking sector actually has to go through a series of transformations. Or once you need to put customers to make sure that they have faith in the banking system. So the people already have access to the bank accounts. They are financially included and they feel secure. So they need to go on to another journey, right? Which is when we become in terms of creation of different products, mobile banking, online banking, introduction of ATM cards, right? To make their life easier, so that if they are impeded by this 9 to 3 hour, right, they'll still have means to deposit money or transfer money, right? So that's in a way of taking them along to the journey, right? So we actually are also involved, all of us, in the banking sector, customer education, from encouraging them to open a bank account and then taking them on a journey slowly. Right.
And are you seeing foreign bank entry in that respect as a possible advantage or as a competitive threat? I mean, there's been a lot of talk of foreign banks giving assistance, making relationships with local banks. We've had a lot of rhetoric from particularly the big Japanese banks have been in sort of, offering help of all sorts. So would you, is this the general attitude of local banks here?
Like Hal has mentioned, the foreign banks that have license have not been able to enter into the retail space, right? So which also gives us a bit more time to refocus and re-strategize in terms of how we actually want to run our banking operation forward, right? So right now, the market is really saturated with very, very limited product offering, right? And we need to do more, right? So what I see is in the next 1 to 2 years, people need to consolidate in terms of what they need to do, right? And people need to think about what is it that they want to be known for, right? In the more developed market, you have different, banks, and every bank is known for example, really good at giving like home mortgages, very good at savings, does very good with pension, things like that, right? So Myanmar market needs to also go into that kind of mode, right? We have over 25 banks. With the entry of another 9, that's quite a lot of banks, right? And all of us cannot be chasing after one deposit and giving out one loan, which is what we're all doing. They need to be more, right? And only with the entry of new entries to the market, they will also encourage our regulator as well to have allow us to open, more product-wise, offer a wider range. Only then, in terms of microfinancing or collateral without collateral, that can that's another thing that we can look at, right? So right now, a lot of people need access to funds, and the foreign banks coming in, they're not going to touch into the SME sector because they'll look at us and say, hey, the local banks haven't even gone there, and they know the market. We've been in the market for over 20 years. If these guys haven't done it, why should we? Just got banking license, a couple of weeks ago, right? So they are not really interested in that space, and that's the sector that we really need help on, right? So they're more interested in doing syndicated lending to help their own customers, to maybe help with really big infrastructure projects, right? So those are the things that they'll be focusing on. But this is like one, Tim mentioned about high end and low end. So SME banking is in the low end, and the project financing, which is a very long-term project that costs billions of dollars, is on the high end, right? So there's those two markets.
I see. So you're saying basically the local banks are on their own in this respect, but that's an area that really needs help. Do you have a view on that, Roman?
Yeah, I think definitely more flexibility in regulations is needed. And
what's your understanding of how the government is approaching the next phase of deregulation or liberalisation in terms of, how it's shaping up Parliament and government?
Well, I think they're approaching it cautiously, and they are right to do this in such a way. As you know, the country is undergoing tremendous changes. A lot of reforms and capacities are limited to oversee more than 20 banks, with some new ones being created. including some specialized one in tourism or in housing and construction, for example. And also, you have a complete overhaul of the way public finances work in this country. And with some questions being raised around the future of the state-owned banks, like MEB or MFTB. And so the central bank, which only recently became autonomous, is quite stretched. And I think both internally, but also on the advice of international institutions, it has decided to move slowly and carefully and cautiously, because it would not like to see another shock, another crisis happen like in 2003, which will shatter the confidence or limited trust in the banks, which is little by little being recreated.
Right, but obviously there are some very glaring issues, including this issue that's constraining lending, even the most simple form of lending, because of the lack of ability to lend without collateral. So what's your sense of what the next moves will be by the central bank, parliament, whoever, to in the sort of steady liberalisation or reform of banking laws? Do you know what is coming up, what the sense of priorities are in Naypyidaw?
Sadly, I do not, frankly. So, but if I see a lot of people who work in the banking industry in the room, so maybe that's a question to ask them for later on during the Q&A session.
We're going to ask you questions later. Well, you can save that for later. Now, Tim, also I'd be interested in your view on how the regulatory environment elsewhere that you've worked in the region compares with where Myanmar's going now.
Right. Well, it's an interesting case study, just looking at Myanmar in comparison to Cambodia, where we have over 30 banks, commercial banks registered. Am I not on?
Yeah.
Oh, it fell down. Okay, here we go. Yeah, over 30 commercial banks and over 30 registered microfinance institutions.
It's in a country of how many million people?
Yeah,
15?
only 15 million people in the country. So, and that is an environment that's evolved over the last 20 years or so. I mean, in a sense, Cambodia has been through its own challenges of reform, and but we've at least had an opportunity to practice for the last 20 years and figure out how to get it right. And I think, in general, the assessment is that the regulatory environment in Cambodia is quite strong and quite healthy, that allows those operators, both in the banking sector and the microfinance sector, to operate effectively. Compared to what we just heard about Myanmar, I think if you then apply that region-wide and then talk about, is there some possibility of creating a general regulatory framework within ASEAN that encourages financial inclusion? I'm not particularly encouraged by the prospect of that happening, because you have such different contexts in the regulatory environment here to Cambodia, Philippines. Of course, you have much more mature markets in Singapore and Malaysia, for example. You know, the environments are just so different from one another that I think it would be very, very difficult to establish a common regulatory framework that really promotes financial inclusion. I think one way in which...
You mean across each country of the region?
Yeah, exactly, within each country of the region. So what role ASEAN can play in facilitating that, it's not clear. Although I do think that if there could be some agreement on common principles that we all will try to incorporate and then modify, customize those for our own, for the different countries within ASEAN, to me that makes some sense. But in terms of creating a framework that applies to every country, I don't think that's possible.
Well, for example, in the panel first thing this morning that I was involved with, we had a proposal from David Carden for a SME bank that is ASEAN-wide and possibly helped by the ASEAN structure. I mean, is that feasible? Yes, Hal?
I'll put my World Bank hat back on. I guess the time that I spent, my feeling personally is that if it's not commercial, it won't work. I really think that governments have a role to play from a regulatory perspective and from a governance perspective, but from a commercial perspective, it won't be sustainable unless it's commercial. Now, the interesting mix we have today is that we have technology that allows us to provide a product on a much more competitive basis to the consumer, because everybody in this room is on Wi-Fi on their phone. So that allows a bank or any other organization to offer a financial product at a much lower rate, making it commercial for banks and other organizations to offer services to that bottom end. And I think that's a unique opportunity that we have today, both in Myanmar with the advent of the new telecom environment, but across the region. And I think this is where I would sort of push back on the government getting too involved. In fact, I would argue that the government should regulate less, lower business licensing requirements and regulation, and allow the market to work, leveraging a lot of this technology.
Maybe I could just remind for people who are just visiting Myanmar that we've just seen an explosion of telecommunications deregulation, and you can now buy a SIM card for $1.50, is it? As opposed to, was it $1,500 like 5 years ago? So that's really quite an extraordinary event. But basically, Hal, I think you're saying that you could commercialise anything. So are you saying that it is feasible to have a region-wide SME bank, or you don't think it's possible to commercialise that model? Sorry.
You could have the bank. Whether or not it would be the best use of that money is a question. Right. So you'd staff it with people, you'd have a big building, they'd have lots of programs, there'd be lots of conferences. But whether or not the actual impact on the SME community or for financial inclusion, whether that's the best use of that resource is another question. I reckon if you gave that to an entrepreneur, right, to build a business and actually to make it commercial, they would probably come up with a better technology more cheaply, providing better service more quickly than any
government or multilateral
just the
organisation.
incentives, there's a misalignment of incentive, fundamentally. And I think there's a lot of brain power in ASEAN, and there's a lot of good communication technology. There's no reason not to do it.
Do you have thoughts on that, any of you?
I think having an organisation that overlooks quite a wide, different set of countries with different values, and Myanmar and other neighboring countries, we're in a different stages of financial inclusion. So how are we actually going to realign our objectives to make sure that we might have a similar strategies or single strategy that's supposed to help everyone, right? In Europe, under EU, they have a European Bank for Reconstruction, right? I don't really know how much of it they do, because when I was in Deutsche, we were in the same building. All these people coming in and going out. So I'm thinking okay, so if they have like a ASEAN SME bank, it's going to be something quite similar, where I want it to be, it should be more practical, not coming up with a set of rules that governs the individual monetary system or the central bank, make them do certain things, right? So I think it needs to be more practical rather than more theoretical.
Right.
That's how I feel.
I guess my overall point was that can you promote financial inclusion and spread access to financial services and all the attendant things you raised earlier on your own in the banking sector, or do we need the multilateral financial institutions, IFIs, or ASEAN as a group to get behind it, or can you do it yourselves? And on that point, Hal, I'll turn to you, because maybe you could discuss, I think it's a very interesting model that Yoma has just done a deal with IFC to to promote this very thing, lending to SMEs, etc. Maybe you could talk a little bit about that and tell us how that works, and if that's a model that should be replicated more throughout the region, or particularly this country.
Right. Well, I think, first of all, it's not something that we necessarily invented, right? I mean, you can learn from other countries and other models. And I think that there are two aspects I would say to it. One is a culture. In other words, a willingness and ability to lend to smaller borrowers. The other one, frankly, is rather predictable and not very exciting, which is just systems. I mean, you just need to invest in technology that allows you to do a large volume of small credits in a sustainable way, which is something every bank needs. So I wouldn't say this is necessarily revolutionary, to be frank. And what we're talking mostly is about credit scoring, about being able to score small credits, allow us to do a decent credit check, and then to disperse a loan in a timely way, and then to monitor that loan and then have the money returned. And I think that's a fairly standard product in most developed markets. So it's not really revolutionary, it's more evolutionary as far as Myanmar goes. And so it's an area that we're working hard on, but it will take time.
And can you tell us how the IFC arrangement is going to
Sure.
work
I
in
mean,
Myanmar?
there are a number of aspects to it. It's certainly targeting SMEs. Nevertheless, I think a lot of it's about governance, and a lot of it's about sort of a certain standard of management. And I think that comes back to what I was referencing earlier about responsibility and trust. So we believe by having them involved with the bank that it's a seal of approval in terms of the way that we run our operations.
Maybe you could recap on what the actual deal is.
Sure. I mean, look, we I'm not sure these are specific, but in any event, we have a facility up to $30 million, which IFC has made available to the bank. The first tranche of that facility is $5 million, which is structured in the form of a convertible loan, which at some point, subject to regulatory approval, allow IFC to be and have equity ownership in Yoma Bank. So that would allow them to sit on the board and effectively participate in the decision making, although albeit a minority stake in the bank. Right. And that involvement, I think at this point in the life cycle of both Myanmar and Yoma Bank, is important to set us on the right path in terms of the way that we govern the bank. So that's the overall architecture of the deal.
Yeah, and it actually is, possibly a way for the future in terms of, boosting financial inclusion, right? I presume that's the actual.
It's an interesting proposition. We are a commercial bank, right? So, and that was my leading statement here. In other words, this type of SME lending or financial inclusion, I see this as a profitable venture if we structure the bank the right way with the right systems and with the right controls. To be frank, if we were allowed to price the risk, your margins are much deeper, to the point Tim made in microfinance, than they are with corporate clients. I mean, to be totally frank, if you're dealing with the largest local corporate, they can squeeze you on your lending margins in a way that 1,000 small borrowers simply cannot. Now, that may be too commercial a proposition to discuss, but it's simply true. So actually, and that benefits everyone. I mean, that benefits the borrower, it benefits the small borrower, and it benefits everyone. So I see this as a very healthy conversation, and one in which we just need to acknowledge and discuss the idea of just providing more services to more people with better product. It's not, it really isn't really revolutionary. It's just about doing kind of standard banking in the best possible way.
But that kind of boost, I presume, is a very useful way that an international financial institution can help in an indirect way, not just coming
We learn
into...
a lot from their international experience. Right. We learn a lot from their experience in Africa, in other frontier markets. We learn a lot from their do's and don'ts. They've stumbled in the past, and although they may not be a commercial operator, because IFC is not, nevertheless, we learn a lot from their experience, and I think that guidance is very helpful to the management team.
Right, and Tim, what's your view in, having worked in other parts of the region?
Yeah, I think, well, one of the interesting things that you see, certainly in the Cambodia environment and others, is that you do have investors, international investors, wanting to come in with equity in the microfinance sector as well, who want to see some profit return back to them, which is a little different than the IFC approach. But absolutely, the more healthy and the more profitable, the more well-run an organization is, a company is, the more attractive it is to outside investors. And so that can only bode well for companies that really and banking and microfinance institutions that focus on being well-run, well-operated, they're going to attract attention, they're going to attract interest, they're going to attract money. And that's healthy for the local economy, as you know, and yeah, it's healthy all the way around economically.
And is this a kind of model you've seen in Cambodia
Yeah,
or
absolutely,
another place?
absolutely. You know, we actually have people knocking on our door saying, "Can we buy into your operation?"
And what have you said?
Well, generally we've said no, because oftentimes it's private equity that's looking for investment, and we want people to come on board who buy into our mission and aren't driven strictly on the basis of profit, returning a profit back. Although we are very profitable, we don't want that to be the primary agenda, because that can tend to be a demotivator away from the financial inclusion side of the equation. And we have to be careful not to be completely commercially driven in order to maintain that financial inclusion aspect.
So you're saying you're happy with the balance you've achieved between
Yeah.
between the profit motive and the
Yes, exactly. Yeah.
and the right. And Kim, how does KBZ feel about going down that sort of route?
We're always open to new options. I think it depends in the sense that what is it that we want to get out of, right? Different people have different strategies in terms of what they're doing. For us, we actually want to help our SME clients, right? We want them to be financially, for them to be financially inclusive. We don't want them to be going into the gray areas, right? And for us to do that, we need to think of different models of getting it done because some of the people are striking the poverty line, right? And if we were to lift out of them, which is what the government wants, apparently, they want to lift 10% out by end of next year. That's a big goal, right? How do we actually do that? Not everybody is educated that they can work in offices or get jobs. A lot of them need to be going through the SME route, be part of the cottage industry, like you said, Guan, to make sure that there are jobs for people who want to work, right? So we need to be part of that, right? And at KBZ, we try to help by giving training to through our Brighter Future Foundation, like a microfinancing, but not for profit. So we're not doing it for profit at all. We have actually trained about over 4,000 women in semi and rural areas to upskill themselves that they can become more entrepreneurial. And we're also putting their children through some computer-based training and things like that.
But this is not straight microfinance.
No.
It's just going into a village and setting
Yes.
up a training.
Exactly, because we all aware from the learning lessons that we had from our neighbors that a woman, excuse me for that, she's very important in a household, right? So sometimes, you might have families where there's a lack of income, right? And you can't really take the mother away and send her to work when they still have kids that are depending on her on a day-to-day basis, right? For when we actually give them a training where maybe she can be a seamstress or a tailor, it's a business that she can sit at home and do and not have to be away from her family, right? And overall, over time, we'll equip her with skills in terms of financial management, so she knows how to manage her budget. And in time, the businesses will grow, and she can employ more, women within her community. And that's how we see the model, replicating.
I think
Tim.
this is just a really important point. And by the way, don't apologize for
Yeah, that's right. I was going to say.
because
It's true.
It's true. Despite the reputation that that women often have of being spenders, If you look at
No.
if you look at family and how families and households are run, certainly in the developing world, it's the women who are the savers, and it's the men who are the spenders, and usually not on the most healthy things either. So what we found, certainly in Cambodia, is that women are a far, far safer and better credit risk than men are. And so we target our products to women.
Right.
Because they're the ones who really are, they will take care of the money. So that's one important point. I think the other thing that you mentioned, which I think is really critical to promoting financial inclusion, is training, as you mentioned. So we're talking about something that goes beyond just financial services, but training in financial literacy for the farther down in the pyramid, the lower you go in the pyramid, the more important training is. I can't emphasize that enough. And that's, of course, training is costly, It costs more to do that. However, in the long run, if you're taking a long-term view, you have to invest in your customers, make sure that you're equipping them to be able to manage their money well, so that they can improve their lives.
But in the case of a small to mid financial institution struggling away here, you're saying, because I presume a lot of these trainees are not people who actually have bank accounts, they're not your customers, or are they your customers?
They are not our customers. But
Right.
the thing is, sometimes
They will become your customers?
that is not really the point, because the thing is, we actually need to help people like that for them to move into the formal, banking sector, right? For example, these ladies, they don't have an income of their own. So if they even want to become our customers, how much money can they put in, right? So by making them more comfortable about earning a wage for themselves and for their family, we are actually creating a model that can replicate, a few times, right? So they become financially independent, and then that's when it really starts.
It's a very good point. Just before we'll turn to you, Roman, in a minute, I was just curious. I read that 99% of microfinance loan recipients are women in Myanmar. I presume it's fairly similar in Cambodia, very high proportion of women.
Yeah, it's about
Yet,
90%.
Who are the bank account holders? I presume the majority of bank account holders are men. I don't know, do you know?
I mean, depositors.
Yeah.
Yeah, I don't know.
It's interesting. We actually had a request a few weeks ago on exactly that point. How many of our accounts were men and women? They often tend to be family accounts, joint accounts. I couldn't give you a breakdown of gender. What I will say, I think it's true of KBZ, it's certainly true of Yoma Bank. 70% of our staff are women.
Right. Yes, and
At a
KBZ
senior
has a very
management
high
level, and many of the branch
70%
managers.
is a lot.
Yeah,
Yes.
we have a
What have you got?
strong
60%,
majority.
55%?
We're probably about the same or a little
Yeah.
bit more.
And do you have an idea of account holders, or is that similar, like family accounts, mainly joint accounts? Or
I think it's all commingled.
right.
Right.
But we know who really wears the pants at home, don't we?
Yes, we
You'd
do.
have to ask my wife.
And Roman, you had some point to make.
Yeah, I think it's good that, Kim, you shifted the discussion to financial inclusion and financial literacy for the poorest of the poor. Because when we look at the situation in Myanmar, again, most of the people do not have access to the formal economy or formal banking sector. And also, it's a large country, very diverse, difficult to access, even for banks. Even if Cambodia has more than 300 branches all across the country, I think a lot of people live far away from those and are not able to access those. And I think this is where the technology revolution, which is taking place right now in this country, can really make a big change. Right. And there have been discussions around leapfrogging. Of course, it's not going to be that simple, but SIM cards, because also they cost $1.5 and not $1,500 anymore, are going to spread all across the country. And I think there will be a lot that one can learn from telcos already now, but even more in a few years from now, about their consumers, how they behave. And yes, so for example, if you talk to Telenor, they will tell you that they attempt to sell top-up cards at very low amounts, 500 chat or 1,000 chat, because this is the amount of money that most people in this country can spend per day. Not more than that. And so this is the type of consumer also that we are talking about when we consider financial inclusion.
Yeah. And can I make the point around financial inclusion? Another interesting, I think maybe aspect of Myanmar is that actually many Myanmar are financially included. They're just not in the formal financial sector.
Right.
You know, to be very frank, I mean, there was a very well-functioning Hondi system
Right,
here.
right, right.
Right, but
that
how do you
lasted
gauge
for-
that? This
well,
is not on record, right?
Fine, but I think the point needs to be just generally speaking made that actually, and this is to my point about market incentives, they need incentives to come into the formal sector because the informal sector actually, not all of them, but serves them quite well. I mean, I have, you know, when everybody gets paid every month and people go and give it to their auntie and it finds its way back through the network all the way back to their family and wherever they are, right? So there's an informal sector which actually serves, certainly in terms of money transfer, relatively well. Now I agree that technology will change all of that, but it's an important point that there's a whole parallel economy that in this particular country has functioned, you know, for the past 20 or 30 years.
That's right, yeah, Roman.
I'd like to talk about, talking about the culture and the local needs and adjusting your financial services to those needs. There is an interesting initiative that was just launched by a payment system Visa and social business proximity design here in Myanmar, where they did research over a number of months to understand the needs for a number of months to understand the needs of seasonal laborers. Because there are a lot of seasonal laborers in the agriculture sector in this country.
Seasonal laborers like agricultural.
Yes, manual workers, low-skilled workers who will move from the delta to Shan State, depending on whether it's rice or tea.
Harvest, yeah.
And so they have done research on the needs of these populations, which probably amounts to several million people, and to try to design a product that Proximity, which is a microfinance institution also, could deliver to them. And that will likely use technology in order for these loans to be delivered or repaid countrywide.
But in fact, though, the bottom line here, even no matter with the explosion of mobile phone banking or, you know, other forms of technology in banking, the bottom line is, wouldn't you have to, these people have to have a bank account before they can take advantage of things like mobile phone banking, right?
Mobile wallet.
No, they don't.
Right, really?
No, not for payments. For under the current regulation, you do need, there is a KYC, you know, your client, but they do not need a bank account, which is very helpful.
Right.
And you have companies like in Cambodia, Wing, which operates, you can just transfer money from one mobile phone to another and they collect the cash at the destination. So it's just remittances, internal remittances that are happening there. That's, again, without a bank account. And that allows for the flow of cash from, you know, from the person who has money to the person who doesn't. Again, that completely is separate from the needing an account in the banking sector. So it's
I think for that, you know, for example, for mobile banking to work, two things. Make sure the infrastructure works. If it breaks down, then people don't really trust it.
Right.
And two is customer education. Once you have those two, you know, pretty much tied up, then you will see a flow of people coming into the financial inclusion sector.
Right. So is KBZ, for example, doing customer education on that?
We will.
Or is it still a bit early days for this to be happening here?
No, I think the customer education is what we need to do.
Yeah, no, I meant in mobile phone transfers and things. Have we seen that yet, or?
Look, it's all happening, but a certain generation is educating themselves. If you look at the number of games and systems on any phone that anyone has, I mean, there's a whole, granted that's not everybody, but a certain part of the market are going to be very literate in technology and making
I think that's 12-year-olds, isn't it?
Yeah.
I don't know. It's not just the 12-year-olds. I would say at a pretty high level, there's a lot of sophistication.
Right.
So I'm not too worried about the adoption. I'm very positive about technology in this country. I think you're going to see more adoption of technology, be it phones or other, very, very quickly.
So this is leapfrogging, right? This is leapfrogging.
Oh, yeah.
How quickly did it happen in Cambodia?
Yeah, I mean, well, the thing is, you have to be careful to, while there's a lot of that leapfrogging going on, you also have to make sure that you're serving people that have the lowest level technology. So your little Nokia phone that's not a smartphone has to be able to, you have to be able, there you go, yeah, like Hal's phone.
I'm that guy.
They go a week without
I'm that
charging.
guy.
A week without charges, right?
You need to be able to do the same kind of banking functions using one of those little phones as you could do on a smartphone.
Right.
But absolutely, we've seen that kind of scaling up happen very rapidly and quick, rapid adoption in Cambodia.
Right. Well, that's very interesting. We'll launch into some questions, I think, next. That's good. Oh, curious bunch. So, okay, the gentleman there, and then you.
Hello, yes.
Please identify yourself and.
My name is Dr. Milton. I'm the CEC member of Chamber of Commerce. I have one microfinance company. So first of all, I'd like to add the information about this the limitation of the microfinance. Just recently, the government has increased to $500, no $300 anymore. And secondly, that the microfinance are making profit is correct, because then the bank, because our interest rate is higher and less operating costs, but we don't have a collateral. So we are very high risk. Either you got your profit or you lost your all our investment. So I'd like to listen from Tim that how can you prevent this non-performance loan in Cambodia? Thank you.
Well,
Thank you.
yeah, that's an excellent question. In the microfinance sector, I think one of the things that also distinguishes us from, say, the commercial banking sector is that we are very high touch, meaning that you have to have staff that can visit and follow up with clients on a regular basis. And for us, that's how we've been able to maintain a very low default rate, actually less than 1%. But that comes at a cost. You know, we have 90,000 clients currently, but over 1,000 staff. So that's, you require a certain number of field staff who know the communities that they're serving, who know the customers, but they're also providing a valuable service to those customers while also helping the company protect its bottom line, just through the financial literacy education and following up, making sure their business is viable. So that's how we're able to keep the non-performing loans low. But you also have an environment where we don't have that kind of a cap on lending that you have here. It's much higher. We can lend, I think it's $20,000 US for
microfinance.
On microfinance.
It's not very micro.
It's not. So it's a very small percentage of our lending goes to the clients in that category, but that's the upper limit. So it's quite, again, very different.
Do you know what it is elsewhere in the region?
I don't know.
Interesting. Please.
Hi, my name is Krista Avery, and I work for KT Group, a Myanmar-based company. And my question also is for Tim. You talked about this sort of frightening trend of loan products for consumption that's emerged for microfinance in other countries. And what it sounded like was sort of a mission-led, more come to form of governance for that. But you used the word intentionality, and you used it early on, and it caught my attention. And I would just like to ask, because I think that's actually quite crucial, how do you embed something like intentionality into these microfinance institutions early on? Is that a regulatory thing? Is that a hard thing? What happens with intentionality?
Yeah, intentionality doesn't come from external regulation. It has to come from the values of the company itself. So if you're starting from the get-go saying, we want to be profitable and we're going to maximize our profits for our shareholders, that's a very typical corporate mission statement. But in microfinance,
10 minutes off.
you have to start from a mission. Well, you don't have to, but I mean, if you're really going to be mission-led from the point of view that you're encouraging financial inclusion, you have to have a mission that is customer-focused. And in order to maintain that intentionality, to protect against the temptations to go totally commercial, you have to have a strong governance structure that protects that mission. So for us, our board of directors is a crucial component in that because, you know, the management team, they're facing the pressures of needing to build operating efficiencies on a daily basis. And so that's their pressure. That's the pressure that they feel. From the board perspective, our mandate is to protect the mission. And as long as our mission is to provide the best financial services to the bottom of the pyramid, and we take that seriously, then that's going to be the best thing to protect and maintain that intentionality.
Thanks. We've got time for probably one or two more questions.
Thank you very much. I won't stand up since I'm in the front. Thierry Tamon from Yoma Strategic Holdings. I have a question about banking regulation and supervision, actually for the whole panel. I'll break it down, and the context of it is, you know, you talked about the informal versus the formal, and if you're to compete with the informal sector, how are you going to encourage the bank regulation to actually allow you to compete? So to Hal and Kim, my question is, if you can get 3 wishes from the fairy godmother, or rather probably fairy godfather of Myanmar central banking, what would those 3 wishes be that will allow you to compete for inclusion? And for Romain and Tim, perhaps you can share from an international regional perspective on other countries where the regulation has been effective in actually allowing the formal sector to provide that inclusion. Thank you.
Kim,
Go ahead, Kim.
fairy godfather.
Go ahead.
It's almost like Christmas has come, pretty early. Free to create products that the market needs without having to send proposals. 2, probably free reign with interest rates, probably demand and supply per what the market needs, and able to not have collateral.
So that's what you can ask Santa for at Christmas.
Center for.
I tend to agree with Kim. I would say clarity, just clarity.
What, you mean from the regulator or?
Yes, just clarity. So clear rules and regulations that apply across the sector that everybody can understand. That's one. Second, pricing to risk. So it allows us to do risk-based pricing. Right? So if you're not a high risk, I can give you a better rate. If you are a high risk, I'll give you a not as good a rate, but you'll be happy to take it because it's commensurate to your risk. And then just sort of free markets. Allow. I think competition within banks, between banks, is very healthy. And I think, frankly, you would see, that competition. If we were allowed to compete more across products or whatever it might be, you would see a much more vibrant sector, and that would serve the people of Myanmar a lot better.
It's a good list too.
To answer your question, I'm not sure from which country Myanmar could learn from, but I think it's already learning inside the central bank about how to deal with this informal sector. Thanks to the reform of the foreign exchange rate, the end of the multiple exchange rates and the introduction of the managed floats for the chat, I think this is a very good learning process for the regulator, and they're probably learning about how to deal with this large informal market, and probably some learnings there could be reused to expand to the rest of the market.
And Tim?
Yeah, I think it would be difficult for me to comment on the region because each country is so different in terms of their regulatory environment. But in terms of just general principles, I would go back to what Hal shared earlier, which is to create a simple and basic regulatory environment that still allows for healthy market competition, market forces to kind of innovate within a fairly simple structure. I think that's what's going to really help the growth occur.
And I would add to that saying, is that in reach, do you think? Or are we still far off? in Myanmar?
I mean, to give full credit, I'm not sure whether you see that anywhere. I think if you talk to American banks, they're not particularly happy with their regulators. So this is a standard discussion between the market and the regulator. So, and I would say that there's certainly potential. There's no reason why it couldn't happen here. It's just, it will take some time. And we have a lot of work to do on our side. The industry needs to improve. It needs to improve its governance. It needs to improve its systems. And needs to become more sort of accountable. So there's an equal weight on both sides.
Right, thanks. Last one, Sunny.
Hello?
Yep, that's working. Yep.
Check. Hi, I'm Sunny Sui. I'm CEO of Myanmar Media. We talk about health, and Kim, we cover about educating the customer and trust, building trust. I think it's also important that you really have to educate the government and also build the trust so that our local banking industry can operate and compete and come up with a better service, more options to the customer. My question is, how long would it take to compete regionally? Because I'm having a lot of problems transferring money and stuff. Thank you.
Do we have a time frame on that so that everyone can get ready?
Not to get too detailed, but a lot of it has to do with currency and less to do with the banking sector. Frankly, access to foreign exchange, your ability to remit money overseas, a lot of it has to do with the managed float. So it's a free float current and a fixed capital account, and that presents a lot of challenges. So I think to that specific issue, in terms of competing regionally, time will tell. I'm not sure. Maybe Kim has regional ambitions. I'm not sure.
I don't know. I think in a lot of ways, like regional is very very ambitious. I think there's a lot of things that we probably need to sort in-house, like locally in the banking sector, so that we are much more operationally efficient and can run like a regional bank before we actually move to regionally. In terms of what Hal said about the managed float, a lot of us are not able to remit money to US directly, right? Because of these sanctions still on financial side, right? So that really needs to change as well, because that involves a lot of work for all of us, all the local banks.
Anything to add? No? I think on that... Do we have time for one more? It says 5 minutes. Okay. No, sorry, the lady up there. Got to draw a line under it.
Thank you so much, panelists. Yeah. Now, my question is...
Could you just identify yourself?
Oh, okay. I'm Kenta Mo. I'm here on behalf of Myanmar Young Entrepreneur Association, and also I'm running the microfinance institution in Upper Myanmar. So my question is, now our government approved a lot of microfinance institutions in Myanmar, I think over 300 already. So as Ms. Kim say, we are fulfilling the business sector in microfinance, high-end and low-end. But according to UNSCAP statistic, our country is 88% of SME. So for the SME financial assistance, there is any future plan and way forward to assist the financial assets from bank? So I would like to know that, especially I think from Cambodia, because of our SME are running a very critical situation, and also without the bank loan. But now bank loan is only with the collateral, but SME, they cannot give with the collateral. So do you have any plan for the SME for bank assistance? Thank you.
I think it comes back to regulation, right? So until that collateral thing is not removed and we're governed by the regulation, it's unfortunate for all of us, not just KBZ, that we are not able to give loans, no matter how small, to SMEs, right? So that's one thing that we really, really need to look at, because I do realize that unless the SME sector gets a big push from the banks, the country will not develop as much as it should, right? Because not everybody could be in their in offices working, right? So that needs to happen. So I think the banks and the government and organizations like yourself, we all need to work together to send the same message to the government that this is something that needs to be relooked at, right? Before when the economy grows, the model needs to change, right? It cannot be the same thing.
Right. How, any thoughts? No? Yeah. Hal concurs. Did you want to say something, Tan Nguyen? Final comment? KBZ?
Excuse me, yeah. I'm Dan Nguyen. I'm a consultant on the KBZ Bank. I just want to clarify the points and also to add to Dr. Kim Cho Suchi, what she has said with regard to the, I think, the SME loan. As everybody knows, SME loans carries a lot of risk because without collateral, I think the banks will be at a huge risk, to lend to this SME financing. But what we are waiting for is the SME law itself, because as far as I know, they're now in the law commission. I mean, with the parliament, and we are going to discuss this more fully in the coming months or so. So unless and until we have this SME law, it will be difficult to lend to SME at this moment. But in addition to that, I think we also need to have something like Credit Guarantee Corporation. Now, it must be set up by the central bank with the concurrence of the government, and also the credit bureau, something like these are the things that we need to have a credible lending to SME. Right. That's the thing. And secondly, I just want to clarify. This is a clarification, and also that. We have this, our former governor, myself. I'm the deputy former governor of the central bank. And I think the questions come up with the how we should be passing the message to the central bank, So just let me relate to our previous experience with the central bank. About 10 years ago, or maybe even later than that, we have the first private banks come into being in 1994. Even by that time, we always say to the private banks, when you open your branches, you must have a grand opening, and we are going to attend this one. Not because we want to enjoy the dinner, not because we want to receive a Sunday gift from them. It's because it's because we want to have a contact at the grassroots level with all the bankers, commercial bankers. It's the only occasion that our governor was so very well. We used to attend together. Sometimes we go to, a lot of, even the ministers of finance went along just to see that what is happening with the commercial bank, what are the problems, what are the issues that's coming up. So nowadays we find that the central bank is moving away from the commercial bank. They are not at all in contact. I think even at the moment, I think we know that central bankers are normally very conservative, but I think at least they must have follow some of those examples, very fine examples from the ASEAN region, like the Bank Negara Malaysia used to meet very, very often with the commercial bankers and mix with them one way or another. But I think the best occasion for them is to meet the commercial banks at the Myanmar Bank Association. So, but they are not coming to this meeting because they said this is the commercial banking business. You just leave it alone. so I think the best way for you to ask, or for us to ask, is for the central bank, to keep in touch with us, just to keep let us give us the opportunity to present our issues, what are issues at the commercial bank, what we should be solving, what are the problems with us. So I think this is the best way to convey the message to the central bank. Thank you.
Thank you very much for that clarification. And we should just remember, though, that the central bank has only recently gained autonomy. So I guess, you know, it was different in your day and now they're... so that's one to keep in mind too. And on that happy note, the time is saying 0, so I would like to thank our panellists very much for a great discussion, great insights.